Good morning, traders. Today, let's dig right into the Russell 2000, the one major US index lagging, even as the S&P, the Nasdaq, and Dow all notch fresh record highs. Now, the technical sets up first. Well, it's grinding near the 2.5 sort of support for now, but it still remains, of course, above the previous record high. Okay, that doesn't necessarily mean it's going to hold this line, but the way I see this currently on the 4 hour is as an ascending triangle. Okay, of course, we need to hold the bottom line. So that's why I was saying it's not necessary that we're going to hold that level. Actually, very, very important is the 2425 support. Losing that low, it's going to probably invalidate the ascending triangle idea. Okay, so this is a very important level. Now, if and we do have, of course, a view from T today, right? If we see a clean breakout above that territory, okay, then that would open the door. There's two ways to do this. One, we can do the range of the open triangle of the triangle here and just put it right at the top and see where this could eventually go. And we're looking at around the 273. Okay, another way is to look at it through a Fibonacci lens. Okay, and we would be looking, of course, at the pullback or low here in this particular case. And there is also this particular resistance levels that they are popping up from the Fibonacci extension tool, because of course we're not just going to go in one leg up to 273. The 38.2 and the 61.8 are considered. The other one would be once the pullback is done and whenever we see actually the reversal, to pull that Fibonacci retracement tool, extension tool down to the end, and then from there, start looking at levels, the 61.8, the 100 and 138.2. Now, there are some key drivers, of course. Now, the big caps have stretched to new record highs, was also yesterday. But on Monday, to be fair, all of the US major indices reached a new high at the same time, at the same session, right? Which is a very rare event to see. Actually happened like 35 times over the past decade or so. And now we see a pullback in Russell, but the mega caps are still stretching to new highs. Okay, even before the Fed rate decision. Okay, so we could see money rotate back into the small caps. Okay, when and if the mega cap sort of stretch ends. It will, of course, depends on how it ends. Okay, if we see it ending in a way where we see a slowdown in momentum, then that's fine. But if we see a bigger move, obviously that could, of course, impact also the Russell. Now, small cap earnings estimates are ramping up. There's like 43% year-over-year growth for Q3 versus the large cap averages, which are much lower. So, with markets expecting the Fed to hold or cut, it still benefits small caps because they have higher variable rate debt sensitivity, right? So, as long as the rates are not going up, then Russell could still theoretically move higher. There is confidence in US domestic momentum as well, which keeps downside risks low for now, near the support level at least. We look at 2.45, 2425, sorry. But of course, we do have the FOMC tonight, so we have to watch out for volatility or for any earning misses. Okay, so it's an important week for earnings as well because most of the Magnificent Seven companies report this week. The short-term setup for me is this ascending triangle and move to the upside with the targets already seen. I would keep stop tights below, just below. Well, there's two ways to play it, and really depends on your target. Initially, you can begin with below the 242, but leave space for 237 because we could literally go down there and then reverse to the upside. If we look at the longer term, just a tiny bit before we, of course, go. If we look at the longer term, we are looking at this very important support level. This is at 2472. Okay. It's a typical, I wouldn't say typical actually, but we see some sort of V-shaped recovery here that we have seen in the other indices as well. So this could essentially be the support low with further continuation to the upside, but it would be no surprise if we saw this turning into a consolidation phase and perhaps even lower legs to the downside if that doesn't hold. So it's very important that initially we hold the 247, okay, and secondarily the 23.6, which is down 2346. Okay, so we do see some divergence also on the daily. Okay, so we have to be aware of the doing an multi-time frame analysis and zooming out. We have to be aware of these signals because this is a bit of a revealing signals here. And we've got consecutive divergence, right? We've got one here, and you've got a second one here, right? So momentum um, is waning. That is important to remember. Now we could see a reset of the RSI down at 30, and presumably that is a 23% decline on the RSI. If we saw something similar here, uh, well, that would be 20. Hold on. Let's just use the ruler. So this is a 45%. No, I don't think that would be anything close to where we're looking at now. We're looking at 45. But equally, if from there to down there, that was, here's an assumption, from there to there, we've actually declined 5%. That took us from the overbought down to that resell level. So for a reset of the RSI, we'll be looking for another 5% decline maximum. So that could be literally the previous bottom. Okay, so we want, if we do see prices moving lower, it would be probably a reset of the RSI. And then the subsequent price action. If the RSI moves up and goes up, that's good. But if it comes down and then it flips to resistance, then we're probably going to see a deeper correction that to 2.222. But for now, yeah, for me, this is more of a long position. Short term is up. Okay, Russell 2000 is built for the late cycle catch up anyway. So with earnings and macro tailwinds, I would trade the breakout, manage risk, let the momentum lead. For now, it's not leading. We want to see that reversing. So catch you at the next level.